In this Chapter 10, we're diving into Fibonacci trading. Now that you know about the basic Japanese candlestick patterns, why not take it to the next level and learn about the how to use Fibonacci with candlesticks. How to use Fibonacci retracement to enter a trade. The first thing you should know about the Fibonacci retracement tool is that it works best when the market is trending. Uptrend. Here we plotted the Fibonacci retracement levels by clicking on the swing low at 6955 on April 20th and dragging the cursor to the swing high at 8264 on June 3rd. Now, the expectation is that if AUD/USD retraces from the recent high, it will find support at one of those Fibonacci retracement levels because traders will be placing buy orders at these levels as price pulls back. Now, let's look at what happened after the swing high occurred. Price pulled back right through the 23.6% level and continued to shoot down over the next couple of weeks. It even tested the 38.2% level, but was unable to close below it. Clearly, buying at the 38.2% Fibonacci level would have been a profitable long-term trade. Downtrend. Now, let's see how we would use the Fibonacci retracement tool during a downtrend. Below is a 4-hour chart of EUR/USD. As you can see, we found our swing high at 1.4195 on January 25th and our swing low at 1.3854 a few days later on February 1. The expectation for a downtrend is that if price retraces from this low, it could possibly encounter resistance at one of the Fibonacci levels because traders who want to play the downtrend at better prices may be ready with sell orders there. The market did try to rally, stalled below the 38.2% level for a bit before testing the 50.0% level. If you had some orders either at the 38.2% or 50.0% levels, you would have made some mad pips on that trade. For now, there's something you should always remember about using the Fibonacci tool, and it's that they are not always simple to use. Fibonacci retracements are not foolproof. What happens when Fibonacci fails? Could it be because of your swing highs and lows, or are markets just not responding to it? Let's go through an example when the Fibonacci retracement tool fails. Here, you see that the pair has been in downtrend, so you decided to take out your Fibonacci retracement tool to help you spot a good entry point. Now, if you really did put an order at that level, your account would take a serious hit if you didn't manage your risk properly. It turns out that that swing low was the bottom of the downtrend, and market began to rally above the swing high point. So, what's the lesson here? While Fibonacci retracement levels give you a higher probability of success, like other technical tools, they don't always work. Sometimes it may hit 50.0% or the 61.8% levels before turning around. Remember, the market will not always resume its uptrend after finding temporary support or resistance, but instead continue to go past the recent swing high or low. Now we go to how to use Fibonacci retracement with support and resistance. In this lesson, we'll show you how to combine the Fibonacci tool with support and resistance levels. Like we said in the previous section, using Fibonacci levels can be very subjective. However, there are ways that you can help tilt the odds in your favor. While the Fibonacci retracement tool is extremely useful, it shouldn't be used all by its lonesome self. Fibonacci retracement with support and resistance. One of the best ways to use the Fibonacci retracement tool is to spot potential support and resistance levels and see if they line up with Fibonacci retracement levels. Let's look at an example of how you can combine support and resistance levels with Fibonacci levels. As you can see, it's been on an uptrend recently. Look at all those green candles. You decide that you want to get in on this long USD CHF bandwagon. You take out the Fibonacci retracement tool, using the low at 1.00132 on January 11th for the swing low, and the high at 1.0899 on February 19th for the swing high. You look back a little bit and you see that the 1.0510 price was good resistance level in the past, and it just happens to line up with the 50.0% Fibonacci retracement level. Now that it's broken, it could turn into support and be a good place to buy. If you did set an order somewhere around the 50.0% fib level, you'd be a pretty happy trader. There would have been some pretty tense moments, especially on the second test of the support level on April 1st. Price tried to pierce through the support level, but failed to close below it. Eventually, the pair broke past the swing high and resumed its uptrend. Use Fibonacci retracement with trend lines. What's another way to tilt Fibonacci levels in your favor? Combining it with trend lines, of course. Here's a 1-hour chart of AUD-JPY. As you can see, price has been respecting a short-term rising trend line over the past couple of days. I want to buy AUD-JPY, even if it's just for a short-term trade. I think I'll buy once the pair hits the trend line again. Before you do that though, why don't you reach for your Forex toolbox and get that Fibonacci retracement tool out? Let's see if we can get a more exact entry price. Here we plotted the Fibonacci retracement levels by using the swing low at 82.61 and the swing high at 83.84. Notice how the 50.0% and 61.8% fib levels are intersected by the rising trend line. Could these levels serve as potential support levels? There's only one way to find out. The 61.8% Fibonacci retracement level held, as price bounced there before heading back up. If you had set some orders at that level, you would have had a perfect entry. A couple of hours after touching the trend line, price zoomed up through the swing high. As you can see, it does pay to make use of the Fibonacci retracement tool, even if you're planning to enter on a retest of the trend line. How to use Fibonacci retracement with Japanese candlesticks. Check out how combining candlestick patterns with Fibonacci levels can improve your trading odds. In this lesson, we're going to teach you how to combine the Fibonacci retracement tool with your knowledge of Japanese candlestick patterns that you learned. When combining the Fibonacci retracement tool with candlestick patterns, we are actually looking for exhaustive candlesticks. The pair seems to have been in a downtrend the past week, but the move seems to have paused for a bit. Will there be a chance to get in on this downtrend? You know what this means. It's time to take the Fibonacci retracement tool and get to work. A long-legged doji has formed right smack on the 61.8% Fibonacci retracement level. It's possible. Other traders were probably eyeing that Fibonacci level as well. Is it time to short? You can never know for sure. If you had shorted right after that doji had formed, you could have made some serious profits. Right after the doji, price stalled for a bit before heading straight down. Take a look at all those red candles. Eventually, price went all the way back down to the swing low. That was a move of about 500 pips. How to use Fibonacci extensions to know when to take profit. Fibonacci levels aren't only used to spot entry areas, they're also good places to take profit. Let's go back to that example with the USD CHF chart we showed you in the previous lesson. The 50.0% Fibonacci level held strongly as support, and after 3 tests, the pair finally resumed its uptrend. In the chart, you can even see price rise above the previous swing high. Let's take out the Fibonacci extension tool to see where would have been a good place to take off some profits. And that wraps up this chapter. We've gone over the essential concepts that will help you navigate the Forex market, providing you with a solid base to grow your trading knowledge. Thanks for joining me, and I'll see you in the next chapter.